But let's focus on the big stock of this morning. That'll be Tata Steel. They delivered numbers that were much better than what the street was expecting. Revenue beat, EBITDA beat, consolidated margins much better, and profitability as well looked quite good. The factors at play with the India business, now that delivered a very, very solid set. The street was bracing for a number between 13 to around 14,000 rupees per ton. We were at around 13,500 rupees per ton. However, they came in much better, more than 16,500 rupees per ton. They focused on the cost side, lower input cost as well helped them out. On the European business, well, we were working with a negative number in terms of an EBITDA per ton of around $107 per ton. It came in lower. So better performance from the India operations and lower losses at Europe. Coupled with that, you had the Thailand business. That's a very small part of their business that delivered an improving set of numbers on the EBITDA per ton basis. When the operational numbers look good, you're focusing on the debt, and that didn't disappoint. 3,800 crores debt reduction on a quarter-on-quarter basis. And also, they've declared some bit of dividend. So the street will like that as well. And all in all, a good set of numbers. But what's the way ahead? We're joined by Amit Dixit, the analyst at ICICI Securities, who joins us on the show. Hi, Amit. Good morning. Well, I think no debates, right? The numbers were very, very good. But the devil is going to be in the detail. And hopefully, we can extract some. And then you all will have their analyst call as well later. But how do you approach the stock from here on, Amit? I ask you this because in the last 20-25 days, you've seen that Chinese HRC prices have corrected a goodish bit. So first up, what kind of a steel price cut are you factoring in May 2023?
Good morning, Nigel. So the results were indeed ahead of expectations, our expectations as well as street expectations, mainly because of the strong performance of India business. However, going ahead, we have seen the weakness in Chinese steel prices setting in, and that is also getting reflected in the export prices. As far as the India prices are concerned, we believe that some bit of imports have been booked from Japan, and that should actually have a little bit of pressure on the prices going ahead. As far as the next quarter is concerned, well, so far we are pretty safe. In fact, because of the 4 consecutive price hikes taken by the companies through from January to April, we are still sitting at around 1,000 rupees per ton increase. That is the spot price I'm talking about, but this can change very quickly if prices dither here on. The bigger story, though, and we have highlighted in one of our notes, is coking coal. So if you look at coking coal prices, they have corrected meaningfully. And this will get reflected, of course, with a lag in this quarter and the quarter ahead. That is both Q1 FY24 as well as Q2 FY24. I think that is something that one needs to watch out for, that the benefit from lower coking coal prices is going to offset some of the weakness that we will see in the steel prices. So that is my take here.
All right, Amit, give us 2 numbers. One is, what kind of an EBITDA per ton are you factoring in from the India business, which has improved drastically from here on, given the dynamics on the price as well as the coking coal cost? And also Europe, when do you see it turning around?
Yeah. So if you look at the India business, as far as our published estimates are concerned, for FY24, we are penciling in an EBITDA per ton of 16,800 rupees per ton. Now, the fact of the matter is that they've achieved a very similar number in Q4 FY23 itself. But going ahead, steel is a business of seasonality. You will have ups and downs. So therefore, at this point in time, at least we stay put to that number, 16,800. And if you look at Europe, given what SSAB has guided in their earnings call, they believe that the margins would be better, shipments would be slightly better going ahead, and prices also would be slightly better. So if you factor all of that in, and along with the fact that iron ore prices have declined, coking coal prices have declined, in fact, we will expect European division to deliver EBITDA in the whole FY24 of around $35 per ton, and this is also our published estimate.
All right. The one thing that the street always likes, Amit, is deleveraging, right? So what Tata Steel has done is reduce their debt considerably by almost 4,000 crores. It's still standing at a hefty 67,000 crores. But do you think this is something that can give incremental gains, the fact that they have reduced their debt? And do you see further deleveraging from the company?
Yeah, Sonia, so 2 factors here. The first one is, of course, that working capital unlocking. I don't think that it is complete. In fact, we will see it happening in H1 FY24. And the second thing is that if you look at the debt, it has increased precisely because they acquired the NINL business. Now, with NINL business starting, it will also give earning support. So this debt has to be seen in context of that. And I believe that going ahead, debt will go down, despite the capex plans that they have. So no doubt about that.
You want to put a number? How much will debt go down from here?
No, so our number for next year is to the tune of $1 billion, what the company has guided. So
Right.
it is roughly, 8,000 crores. We are expecting that to go down.
Okay, all right. Amit, the numbers look very, very good, but that's the problem, right? Pre-positioning. In pre-open, the stock is as flat as can be. Yesterday, we saw a lot of buying, a lot of delivery-based buying as well. What would your advice be? What is your official rating on the stock?
No, so we have an ad rating on the stock with a
Okay.
target price of 120 rupees a share. And
Okay.
I believe beyond these initial hiccups, I think the outlook for the stock looks good because that what you pointed out that the losses are narrowing down at Chorus, the earnings are
Got it.
improving in India. So
All right.
basically, yeah.
Amit, before we let you go, you've initiated coverage on Coal India, after you've taken guard at ICICI Securities. Today, I think, is the note has been released. Quickly tell us, what is the target price and what are the factors you're factoring in? That's why you're positive on the stock.
Yeah, so we have a target price of 255 rupees on the stock. There are four things why we are quite positive. The first one is that that Coal India, for the first time, they have breached the production of 700 million tons. Not only that, for the first time, they have also breached their target. So, and there are, levers for production ramp up, particularly if you see some of the subsidiaries that were lagging, such as ECL, there are enough number of projects that should help them to increase production from even those subsidiaries, apart from MCL and NCL. Second point is on evacuation infrastructure, the railway lines that they are planning, the 3 big railway lines and the 4 with the joint venture. I think they will be complete by FY26. So you could see that, close to 335 million tons per annum of evacuation capacity will increase. Third point is on e-auction prices, highs from, the real highs levels, but is still higher than what we have seen in the past. So that should definitely help. And as far as valuations is concerned, well, Coal India is always quite favorable on valuation. We believe that with a very stable set of, earnings that we forecast for the stock, we believe that EPS for the stock could be around 38 to 39 rupees for next 2 years, and that should sustain a healthy dividend yield as well. So we believe that this is a very stable play, and the fact that they have been ramping up production, they have taken steps for evacuation infrastructure. That is why we are quite positive on the stock.
All right. Thanks a lot for joining in. Appreciate your thoughts. So that's on Tata Steel. Of course, you will be hearing the management very soon on CNBC-TV18. So do stay tuned in for that. Interesting discussion lined up on the growth in the India business as well as the way forward as far as the deleveraging is concerned. But let's get back.